Hi, this is Brennan on behalf of the Dynamic Trader, and in this video we'll be covering how and why I use the monthly, weekly, and daily time frames in my analysis. Now, as trend traders, we want to trade with the momentum of the market as opposed to against it. We also want to make sure that we are not entering the market when price is moving sideways, which is also known as a consolidation. By using the monthly and weekly time frames, we get a great view of the overall direction of the markets. Many traders trade only using charts like the 5-minute, 30-minute, and 1-hour charts. And while this can be a valid strategy, many of these style of traders are often caught going against the trend, which can result in unnecessary losses. Now, with that being said, we'll go ahead and move over to the monthly time frame. When we look at the monthly time frame, we are looking for the establishment of a trend. And in this example of Visa Incorporated, we want to see price creating new all-time highs, which, as you can see from this trend structure, price has continued to create new all-time highs over the years. Now, on this time frame, it is beneficial to look at last year's data, which, as you can see here, in a bullish market, when we are looking to take long positions, ideally we would like to have price trading above the high of last year, which in this example it is. And if we were looking to take short positions in a bear market, we would want to see price below the low of last year. On the monthly time frame, we are also looking for major areas of support and resistance, which is a topic that I will cover in an upcoming video. Now, if price is not trending on the monthly time frame, I'll immediately disregard the chart and move on to the next stock or currency pair. If price is trending on the monthly time frame, like it is in this example, then I will then move to the weekly time frame, which we will go ahead and have a look at now. Shown is the weekly time frame of Visa Incorporated, and on this time frame we are establishing the bias and the trend from a weekly perspective using the moving averages, which I will also explain in a future video. On this time frame, we are also looking for strong areas of support and resistance, and the weekly time frame will generally show 3 to 5 years of data, but we are really only concerned about taking data from the last year into consideration. And if the chart looks to be trending well in the weekly time frame, I will then move to the daily time frame, which is what we will switch over to now. Shown now is the daily time frame of Visa Incorporated. And on this time frame, we will also assess the bias and the trend, as well as look for any strong areas of daily support and resistance. This is going to be the time frame where we actually look to enter positions on any specific stock or currency pair, as well as look at candlesticks in more detail and any relevant chart patterns that would add as a confluence of events to actually taking a trade. As I've mentioned, the first video in this series is meant to be an extremely basic overview of how we look at the monthly, work our way to the weekly, and then the daily time frames when analyzing any specific stock or currency pair. So with that being said, I hope you found this video very helpful, and as always, thank you for watching, and I hope to see you on the next one. Thank you.